Hey everyone, welcome back to Corporate Decoder. Today, Valued Advisors Trust just filed its latest N-CSR report, and I'm seeing some interesting trends in their fund performance. Quickly, this is not financial advice, just my take on public filings for educational purposes. This report gives us a snapshot of how several of their funds performed over the first half of 2026. Showing us who is really in the lead. This document is from the US Securities and Exchange Commission, the government agency that keeps an eye on public companies. It is a report that registered investment companies, which are basically companies that pool money from many investors, have to file. This one is for Valued Advisors Trust, and it covers the period ending the 30th of April 2026. Let's dive into one of the funds, the Dana Epiphany Equity Fund. For the 6-month period from the 1st of November 2025 to the 30th of April 2026, this fund had a net asset value of just over $77 million. When we look at costs for a hypothetical investment of $10,000 in the institutional class of this fund, the costs for these 6 months were $43, which works out to 0.85% of the investment. That is a fairly typical expense ratio for an actively managed fund. Now, where did this money go? The top holdings give us a clue about the strategy. NVIDIA Corporation is the top holding at 7.5% of net assets, followed by Apple Incorporated at 6.2%. And Alphabet Incorporated Class A at 5.7%. Microsoft Corporation and Amazon.com Incorporated round out the top 5. It is a clear focus on major technology companies. When you look at the sectors, technology makes up a huge chunk of this fund, about 33.4% of net assets. That is a big bet on the tech industry. Other significant sectors include financials at 12.2%, communications at 11%, and consumer discretionary at about 10.9%. Digging a bit deeper into the fund stats, the advisory fee, which is what the managers get paid, was about $179,616 for this period, net of any waivers. The portfolio turnover rate was 19%, meaning they bought and sold about 19% of the fund's holdings during the period. This suggests a moderately active management style, not super aggressive, but certainly not just buying and holding forever. Next up is the Dana Epiphany Small Cap Equity Fund. This fund brought in a bit less net assets at around $34 million. For a hypothetical $10,000 investment, the costs were $52 or 0.95% of the investment for the 6-month period. This is slightly higher than the Epiphany Equity Fund, which is not unusual for smaller cap funds. The top holdings here are quite different. Mer Group Incorporated is listed at 2.8%, Powell Industries Incorporated also at 2.8%, and Cord Energy Corporation at 2.4%. These are generally smaller companies than those in the Epiphany Equity Fund, which aligns with the small cap focus. Sector-wise, this fund is quite diversified but leans towards healthcare at 16.3%, financials at 16.4%, and industrials at a solid 19.2%. Technology, while still present, is a smaller piece here at 14.3%. This mix reflects a more diverse approach to small cap investing. The advisory fee for this fund was about $33,743. The portfolio turnover was a bit higher at 23%, suggesting slightly more active trading compared to the Epiphany Equity Fund. Now, let's look at the Dana Large Cap Equity Fund. This fund had net assets of about $68 million. For a $10,000 investment, the costs were $38 or 0.75% of the investment for the 6 months. This is actually lower than the Epiphany Equity Fund, which might seem a bit counterintuitive, but could be due to scale or specific fee structures. The top holdings here are very much like the Epiphany Equity Fund, dominated by big tech names. NVIDIA Corporation leads again at 7.9%, followed by Alphabet Incorporated Class A at 6.8%, and Apple Incorporated at 6.5%. Microsoft and Amazon complete the top 5. Similar to the Epiphany Equity Fund, technology is the largest sector at 35.4%. Financials are next at 12.5%, then communications at 11.2%, and consumer discretionary at 10.4%. This shows a strong tilt towards growth in the large cap space, heavily weighted towards technology. A key piece of information here is that the investor shares of this fund merged into institutional shares on the 28th of July 2025. This is a common move to streamline fund operations and potentially reduce costs for shareholders. The advisory fee here was around $133,820. The portfolio turnover rate was quite low at just 8%. This suggests a more buy and hold strategy for this large cap fund. Moving on to the Kovitz Core Equity ETF. This ETF had substantial net assets over $1.3 billion, making it the largest fund we're looking at today. For a $10,000 investment, the costs were $50, or 0.99% for the 6-month period. The sector breakdown shows technology as the largest at 23.3%, followed by financials at 18.6%, and healthcare at 14%. Industrials are also a significant part at 13.7%. Unlike some of the Dana funds, this ETF has a more balanced approach, avoiding an extreme concentration in any single sector. The advisory fee was a hefty $6,371,177. The portfolio turnover was 21%, indicating a moderate level of trading. An interesting development here is that starting the 1st of January 2026, Focus Partners Wealth LLC became the new investment advisor, following an internal restructuring. It is important to note that the portfolio manager did not change, and the fund's investment strategy remained the same. Also, on May 15, 2026, the Fort Pitt Capital Total Return Fund was reorganized into this Kovitz Core Equity ETF. This means it absorbed another fund, a common strategy to grow assets and potentially achieve cost efficiencies. Let's check out the Slow Capital Growth Fund. This fund had net assets of about $99 million. The cost for a $10,000 investment were $37, or 0.77% for the 6-month period. This is quite low, especially for a growth-oriented fund. For the 6 months ending the 30th of April 2026, the fund returned minus 3.33%, while its benchmark, the Morningstar US Target Market Exposure Index, returned 5.43%. This means the fund underperformed its benchmark by a significant 8.76%. The advisory fee was about $230,125. The portfolio turnover was 16%, which aligns with the fund's name, suggesting a more patient approach. The sector allocation shows technology as the largest at 36%, followed by communications and healthcare both at 18%. Consumer discretionary is also a sizable portion at 16.5%. It is heavily weighted towards growth sectors. Looking at its performance since inception on the 6th of December 2024, the fund is down overall, with a $10,000 investment being worth $10,750 by April 2026, compared to the benchmark, which grew to $11,962. The average annual total return since inception is 5.31%, significantly lagging the benchmark's 13.68%. This shows a challenging start for the fund relative to its index. Next is the SMI Dynamic Allocation Fund with net assets of around $82 million. The costs for a $10,000 investment were $65, or 1.25% for the 6-month period. This is on the higher side, reflecting its strategy. The fund itself did quite well, gaining 10.31% during the 6 months, beating both the S&P 500 index at 6.03% and a 60/40th stock bond portfolio at 3.94%. This fund uses a dynamic asset allocation strategy, which means it shifts its investments between different asset classes based on market conditions. Looking at its longer-term performance, a $10,000 investment in this fund grew to $18,829 by April 2026. The S&P 500 index, by comparison, grew to $41,379, and their own weighted index grew to $25,688. While the fund did well in the last year, its long-term track record has lagged behind major indices. The advisory fee was about $384,968. The portfolio turnover was 51%, indicating a more active reallocation strategy, which aligns with its dynamic allocation approach. The top holdings are interesting. Sprott Physical Gold Trust at 17.2%, followed by SMI 314 Real Asset Allocation ETF at 13.4%, and BNI Mellon US Large Cap Core Equity ETF at 13.3%. This shows a diversified approach including commodities like gold alongside equity ETFs. Now, the SMI Multi-Strategy Fund with net assets around $58 million. Costs here were $66, or 1.26% for the 6-month period. This fund uses a mix of strategies, 50% dynamic asset allocation, 40% stock upgrading, and 10% sector rotation. It performed strongly, gaining 10.78% for the period, outperforming the S&P 500 and the 60/40th portfolio. This diversified approach seems to be working well in the short term. Looking at its long-term performance, a $10,000 investment grew to $22,048 by April 2026, which is respectable, but still behind the S&P 500's $41,379. their own weighted index did a bit better at $25,688. The advisory fee was about $238,353. The portfolio turnover was 59%, which is quite high, reflecting its multi-strategy approach involving more frequent adjustments. The top holdings include iShares Russell 1000 Value ETF at 11.4% and SMI 314 Full Cycle Trend ETF at 10.6%. It also holds Sprott Physical Gold Trust, showing its diversification. Finally, the SoundMind Investing Fund with net assets of about $98 million. Costs here were $63 or 1.19% for the 6-month period. This fund focuses on a stock upgrading strategy. It gained a strong 12.89% during the 6-month period, more than doubling the S&P 500's gain. The fund benefited from strong performance in commodities due to geopolitical events and solid international stock positions. Over the last 10 years, a $10,000 investment here grew to $24,379, which again is decent but trails the S&P 500's $41,379. Their custom index, however, did very well, growing to $31,821. The advisory fee was approximately $437,510. The portfolio turnover was 49%, which is quite active, fitting a strategy that involves upgrading holdings. The holdings are concentrated in ETFs, primarily iShares Russell 1000 Value ETF at 28.3% and SMI 314 Full Cycle Trend ETF at 25.7%. This high concentration in just 2 ETFs is a key characteristic of this fund. Now, switching gears a bit to the financial statements, let's look at the Dana Large Cap Equity Fund. As of the 30th of April 2026, its net assets were about $68.4 million. The investments in common stocks were valued at over $68.1 million with a cost basis of around $40.2 million. This means the fund has seen significant appreciation on its stock holdings. Under common stocks, the technology sector is a major driver, with holdings like Apple Inc. valued at $4.4 million and NVIDIA Corporation at $5.4 million. The communications sector is also significant, with Alphabet Inc. class valued at $4.6 million. Looking at the statement of assets and liabilities for the Dana Large Cap Equity Fund, its total assets were around $68.5 million, while total liabilities were much smaller at about $69,000. This gives us a clear picture of the fund's strong net asset position of $68.4 million. On the statement of operations for the 6 months ending the 30th of April 2026, the fund generated net investment income of $135,379. More significantly, it had a net realized gain on investment securities of nearly $4.8 million, offset by a net change in unrealized appreciation of about $2.1 million. The overall net increase in net assets from operations was over $2.8 million. For the Dana Epiphany Small Cap Equity Fund, as of the 30th of April 2026, net assets were about $34.2 million. Investments in common stocks were valued at over $33.8 million, with a cost basis of around $25.7 million, showing solid growth in its small cap holdings. In the common stock section, we see a focus on industrials at 19.17%, healthcare at 16.33%, and financials at 16.39%. These sectors are key for small cap growth. The statement of assets and liabilities for this fund shows total assets of about $34.29 million and liabilities of just over $53,000, resulting in healthy net assets of $34.23 million. The statement of operations reveals a slight net investment loss of $232,267 for the 6 months. However, this was more than offset by a net realized gain on investment securities of about $3.76 million and a net change in unrealized appreciation of $1.75 million, leading to a substantial net increase in net assets from operations of over $5.5 million. Let's look at the Dana Epiphany Equity Fund. As of the 30th of April 2026, its net assets were the largest among the Dana funds at $77.2 million. Common stock investments were valued at over $76.5 million with a cost of about $54 million, indicating strong performance appreciation. The sector breakdown is heavily weighted towards technology at 33.43%, followed by communications at 10.97%, and consumer discretionary at 10.94%. This fund is definitely making a big bet on tech. On its statement of assets and liabilities, total assets were nearly $77.3 million, with liabilities around $81,000, leading to net assets of $77.2 million. The statement of operations shows net investment income of $166,467 for the 6 months. More importantly, net realized gains on investment securities were nearly $4 million. But this was counteracted by a net change in unrealized depreciation of about $266,000. The net result was an increase in net assets from operations of almost $3.9 million. Now onto the Slow Capital Growth Fund. Its schedule of investments as of the 30th of April 2026 shows total investments valued at about $99.8 million, with a cost of around $85.9 million. The fund has a notable sector allocation in communications at 18.03% and consumer discretionary at 16.48%. The statement of assets and liabilities for this fund shows total assets of just over $100 million and liabilities under $168,000, giving it net assets of $99.9 million. The statement of operations reveals a net investment loss of about $232,000 and a significant net realized loss on investment securities transactions of around $3.4 million. However, a substantial net change in unrealized appreciation of about $1 billion helped offset these losses. The overall result was a net decrease in net assets from operations of about $2.6 million. This fund had a tough period in terms of realized gains and income. Let's examine the Covet's Core Equity ETF. As of the 30th of April 2026, its investments were valued at a massive $1.28 billion, with a cost basis of over $1 billion. This ETF is clearly a large player in the market. The sector breakdown here shows a strong allocation to financials at 18.64%, technology at 23.3%, and healthcare at 14.02%. It is well diversified across key growth and value sectors. The statement of assets and liabilities shows total assets of over $1.31 billion and liabilities of about $3.9 million, resulting in impressive net assets of $1.31 billion. The statement of operations shows a net investment loss of roughly $565,000. However, this was dramatically overshadowed by a net realized gain from in-kind transactions of nearly $107 million, and a net change in unrealized depreciation of about $17 million. The net result is a significant increase in net assets from operations of over $67 million. The in-kind transactions, common for ETFs, can lead to large gains or losses depending on market conditions. Looking at the SMI Dynamic Allocation Fund, its schedule of investments shows total investments valued at about $82.7 million, with a cost of around $64.8 million. This fund is heavily invested in exchange, traded funds at 82.59%. Within the ETFs, domestic equity ETFs make up 31.93%, followed by international ETFs at 20.22%, and dynamic asset allocation ETFs at 13.42%. The inclusion of Sprott Physical Gold Trust at 17.23% as a closed. End fund highlights its allocation to alternative assets and commodities. The statement of assets and liabilities shows total assets of $88.6 million and liabilities of nearly $6 million, resulting in net assets of $82.7 million. The statement of operations shows net investment income of about $430,000. It also had a net realized gain of $3.3 million and a net change in unrealized depreciation of $3.4 million, leading to a healthy net increase in net assets from operations of approximately $7.8 million. Finally, the SMI Multi-Strategy Fund, with its schedule of investments valued at $58.8 million, with a cost basis of about $48 million. This fund too is heavily weighted towards exchange, traded funds at 84.11%. Its ETF holdings include DIA Alternative ETFs at 6.84%, DIA Domestic ETFs at 15.84%, and international ETFs at 6.56%. It also holds Sprott Physical Gold Trust at 8.52% and a significant portion in DIA Gold funds. The statement of assets and liabilities shows total assets of $61 million and liabilities of about $2.2 million, resulting in net assets of $58.7 million. On its statement of operations, net investment income was around $347,000. Net realized gains on investment securities were about $1.7 million, and the net change in unrealized appreciation was close to $3.7 million. This resulted in a strong net increase in net assets from operations of almost $5.8 million. Overall, what we're seeing is a mixed bag across these funds. Some of the Dana funds have a strong concentration in technology, which has likely served them well, but also carries risk. The Slow Capital Growth Fund had a rough period, underperforming its benchmark significantly, while the SMI funds, with their multi-strategy and dynamic allocation approaches, seem to be navigating the market more effectively, especially in the short term. The COVID's Core Equity ETF, on the other hand, is a giant with substantial assets and a balanced sector approach, showing strong gains driven in part by unique ETF creation redemption mechanisms. It is clear that diversification and strategy play a huge role in how these funds are performing. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe, and join our Discord community linked in the description.